Welcome to this introductory module on credit information. Credit information has taken on much bigger meanings in the last 20 years in India. But before we talk about what is credit information, let's talk about data. Data is raw. It's a set of numbers, it's a set of facts. When you oil data, you get information. When you torture data to confess, you get information. And when that information, which has a more meaningful pattern and a more meaningful design to it, is regarding the credit that you might take, it becomes credit information. Now, when I talk about credit, what does it mean? In the larger context, it means any transaction, any activity where you avail of a service or a product and pay for it later. Examples typically is a loan, is a credit card, but it could also extend to utilities and insurance companies and many other such services, which we will talk about in our subsequent modules. The important thing to understand is that this is information. So it's a replication of your factual status in terms of the loans that you might have taken in the past, whether you've repaid them, whether you've not repaid them still and they're active, whether you are current and not outstanding and not delinquent, or if you have been late, by how many days have you been late. There is a saying in this industry which says that past behavior is a typical predictor of future behavior. And therefore, if you have paid your loans in time in the past, the likelihood that you will pay on time in the current situation is higher. Equally, if you have been delinquent in your loans in the past, then the probability that you will perhaps be delinquent again is a little higher than somebody who has been regular in making his payments. It's also important here to understand the difference at a very high level between a credit information bureau and a credit rating agency. As you know, we have credit rating agencies in India, the CRISILs, the ICRAs and the CARES, and they rate a bond issue or a issue of a company before it actually goes public. That rating is demonstrated through an alpha code which talks about a AAA or a C or a B. And it's an opinion. It's an opinion based upon various facts that the rating agency collects. On the other hand, a credit information bureau is a factual mirror of your past credit history. All it tells the lending institution that the person has taken loans, has serviced them, behaved well and paid on time, or has been delinquent. It is not an opinion about the future prospects. It's an indication, it's a statistical number. And that is something that you as a lender interpret and then decide based on your credit policies and your credit risk appetite whether to give a loan or not, how much to give, and on what terms to give that loan. The importance of credit information in India has significantly increased in the last 20 odd years. Credit information enables you and provides you with a tool to make more informed decisions and to make more objective decisions. It helps you in two main areas. One, to mitigate risk. Risk at the time of giving the loan, risk at the time of evaluating your portfolio, and to give you early warning signals in terms of whether your portfolio is going to deteriorate overall in quality and whether individual cases are more likely to default given changes that are happening to the credit profile of that particular individual or the company that you've given a loan to. The other advantage of credit information is that it helps improve efficiency. It reduces your turnaround time and it reduces, therefore, your cost of servicing and approving loans, making you more efficient and making the customer, whether it is the individual or the company, at ease in terms of transparency and therefore enabling you to devote time to processing loans faster and better. Recognizing the importance of credit information in the financial sector, we've devoted an entire course consisting of several modules in the credit information industry. One of the first modules you will encounter or go through is understanding who are the various stakeholders in the credit information industry. These stakeholders play an important role together and individually to make the industry work as efficiently as it can. There is again a regulatory environment that has been specifically created to monitor and regulate and inspect the credit information bureaus in India. We will have a full module on the regulatory environment and the law that governs credit information. The core of credit information, or the main output, is a report. It's a credit report, and then there is a score, which is a numerical value to the probability of a person not paying his loan on time. The credit report and the credit score are extremely important because they actually help you to take your informed and objective decision. We have a full module on that for the benefit of you as a lender and even you as a person interested either in taking a loan or generally in the financial services sector. Now, whilst credit reports and credit scores are the core bread and butter products that the credit bureau industry offers you, there are a whole range of new products that have emerged in the last decade. These products address again a common requirement of you as a lender to mitigate risk, to take informed decisions. And we have a whole module on that which runs through the current set of products and services that credit bureaus in India offer. Globally, credit bureaus work on a principle. And these credit reporting principles are very important because they apply across the services that a bureau offers you in this country also. Therefore, we have a full module for you on the principles of credit reporting, and they are extremely core and basic to the existence and development of this industry. Our last couple of modules covers a crystal ball look at what will credit bureaus look like, say 5 years from now. This is not pure guesswork because it also recognizes the evolution of the industry in other countries where bureaus have been in existence for a fairly long time. There are issues and there are opportunities. And in one of these modules that you will come across, we actually discuss these issues and these opportunities along the way. And there is another concept which is probably going to become important in India and already exists in many countries, which are credit registries. Often people get confused between a credit information bureau and a registry. And there are countries where a registry and a bureau coexist. We will discuss that also in the modules that follow so that there is clarity for you as a lender and understanding what is the difference and the common factors between a credit information bureau and a credit registry. Let's take a look how credit information is linked to lending, or vice versa, how lending is linked to credit information. An individual or a company makes a loan application to a bank, to an NBFC, to a housing finance company. The bank, the NBFC or the housing finance company that is considering this loan application will make an inquiry on any one of the bureaus in India. The credit bureau, based on the data it has, will put it together and produce what is called a credit report. And along with that credit report, they will also provide the lender who is taking a decision with a score. As I said earlier, the score is a number, quantifies the likelihood of a non-payment happening for this particular borrowers based on the data that exists in the credit bureau. The credit report and the score can therefore lead either to a positive decision or a negative decision. However, we should be very clear here that the lender is not taking its final decision based only on the score and the report that comes from the bureau. The lender will look at salary certificates, tax returns, balance sheet, cash flows, P&L, industry, performance, and all that. And then the lender will decide, supplemented as he will be by a credit report or a score, which is an important component of the decisioning, to finally approve a loan or to deny the loan. Now, once the loan has been disbursed, what will then happen is that periodically, typically every month, every fortnight, the lending institutions in this country will send the data on the repayment of the loan either by the individual or the company to the 4 bureaus. Basically, this ensures that repayment history, delinquencies, regularity of payment is all current in the bureau. So the next time another bank, an NBFC or a housing finance company pull a report or a score, they have the most recent updated data.